This is what we have here, the dollar index monthly time frame. So let me try to position it in a way that we can clearly see it. So if we just look here, what is happening, starting just from here, we can see that we have a low here. Let me note this low here. So we have a low. So we have a low here, and this is the low that begins this movement upwards. Okay, so this is the low that begins this significant move going up, or this is the low that begins the rally. Okay, so if you get to see, this is where the rally ended. Okay, so this is the high where the rally ended. Okay, so if we were to just look at this, okay, so this is gonna be the range that you're gonna be working with it. Okay, so this is where the rally began, and this is where the rally ended. Okay, so this is what we have here. And if you get to look here, you get to see that price push down, and when price push down, we get to see that it gets to this low here, and it takes it out. So we have a what we have sell side liquidity being collected at this level here. So this indicates a shift in market structure. Okay, so this is a shift in market structure here, that price is most likely to continue to go down. Okay, but since as price was pushing down, you can see that we have a lot of liquidity void. So price is gonna come back and just close that liquidity void, and it's gonna use any institutional reference point to close it and then go down. Okay, so let me shift on 3 months before I just come back. So even if you look on this 3-month chart, you can see that it's clear that the institutional order flow is simply bearish. Okay, so you can see that the institutional order flow is simply bearish. We have this low here that begins the rally being taken out. Okay, and then price push up a little bit just to close that void that has been created, and then it push down. Okay, so the institutional order flow for the dollar index, it's bearish. So let's go back on monthly. It's not every day that you will need to just go to 3-month chart. It's not necessary. It's just for me trying to show you something. So basically you can see this is what we have here. Price push down. Okay, so as price was pushing down, it left a lot of liquidity void. Okay, so what we're gonna be anticipating is price to come back and close that liquidity void that has been left. Okay, so until price take out this high here, okay, until price take out this high here, we can say that now the order flow is bullish. Okay, on the monthly time frame, we can say the order flow it's bullish for what, for the monthly. Okay, and also for the other time frames, because whatever you get to see, we need to differentiate between the order flow move. Okay, when price is moving to a certain direction, is it moving because it's retracing, or is that direction that it's supposed to go based on order flow? Okay, so there is a difference between a retracement and the real movement of price. Okay, so what we are anticipating here, it's gonna be a retracement just to close this here. Okay, because we have already established from here and from also the bigger time frame that our price is most likely to continue to go down. We have an order flow that is bearish. There is a shift in market structure here. So we have already established, we are clear on that fact that our price is going down. So what we want to see here, we want to see price pushing up and getting to a certain level where we get to have this fair value gap here. We have this fair value gap here. There's the fair value gap here. We have a fair value gap at this level here, and then if you get to look here, we also, this is the fair value gap here. Let me just mark it. So this is the fair value gap here. Price came and closed that fair value gap, and guess what, price is now declining. Okay, So since we already have the directional bias, or we already have an idea that our price is bearish, what we gonna be anticipating from here at this fair value gap here, we're gonna be anticipating that our price is gonna push and get to this level, and then from this level of our fair value gap here, price is gonna push down. Okay, so basically this fair value gap that we have here, this fair value gap that we have here, it's gonna act as a draw on liquidity to attract price to retrace a little bit, just to close this liquidity void here and continue being bearish. So that's what we have right now in our mind. So whatever we're gonna do in a smaller time frame, we need to hold that picture and keep that picture. Okay, so let me go back on this one. So this is what we have here. We have this fair value gap here, and if you look here, this is an order block. These consecutive green candles here, these are order block. If you just go to another time frame, you might find that this is just one candle. So you can see, let me go to 3 months time frame. So if you get to look on 3 months time frame, you can see that the 3 months time frame, it's indicating that we have a fair value gap from here to here. This is the fair value gap, and then if you get to look here, we get to see that we have an order block here. So this is an order block here. Okay, so this is an order block, and if you see, price got to this level of the order block, and then it got to this level here. It beautifully respected the order block, and then it pushed down. Okay, and I hope this is clear. So let's switch now to, let's switch back, and we get to look at that. So we get to look at that. So you can see, this is what I was talking about, referring to this level here, this consecutive up candle as an order block. So price gets to that level. Since price closed this fair value gap, it failed to take out this high here. We can't say that our price is bullish. Okay, because for price to be bullish, we need this major high here, this major swing high, to be taken out. If this swing high here is taken out, we're gonna say what? Price is bullish. But now we can't say that. The last time we had a major swing, we had the major swing low being taken. Okay, so this is the major swing low that was taken out, which begins this rally before the drop. Okay, so for price to change direction, we need this to be taken out. Okay, so we can say it's some sort of, it gets to now give us an idea that the bias that we have here, that our price will continue forever going down, it has now changed. Okay, so when price take out this here, it will now signal to us that our price is now changed, it's going up. But you can see right now that hasn't happened. Price did close this fair value, this liquidity void that was created as price was going down, and then we have a fair value gap here. Hence, that's why we say shift in market structure, and then after that shift in market structure, you look for a fair value gap. It's basically the same thing all over and all over again. So this is what we have here. We have this fair value gap here. These are monthly fair value gap, and then we have this fair value gap here at the top here. It's also our monthly fair value gap, but this is a bearish fair value gap, and this is a bullish fair value gap here. And then we can see how price beautifully respected this fair value gap, and then it dipped too much this time around, and then it push up, just closing this fair value gap, and then it push up, and then we have this fair value gap here. So according to my mind right now, I'm thinking this fair value gap here, it's gonna act as a draw on liquidity. Okay, so price is gonna be pushed here. It has already gotten momentum here from this fair value gap here, so it's gonna push up using this momentum here, and this fair value gap here, it's gonna act as a pull, it's gonna act as a draw on liquidity, it's gonna act as a pull to pull price to get to this level here. And then from this level here, based on the narrative that I have and based on the bias that I have, what I want to see is price getting to this level here, closing this fair value gap, and then pushing down. Okay, So that's what I have right now in my mind, based on the idea that right now price is bearish on the dollar index. Okay, looking at the monthly institutional order flow, price is bearish. So I just want to see price pushing up and getting to this level. And to tell you the truth, this is a lot of price action that we're gonna have from the smaller time frame. This is gonna be a lot of price action that we gonna have. So right now, if we get to look on the bigger time frame perspective, what I will say about the currency pairs, I will be anticipating them to lose strength. Okay, so I'm gonna anticipate the dollar index, I mean euro USD, and the GBP USD, which is the pound dollar. I'm gonna expect those pairs to be going down. Okay, so then I'm gonna expect all USD base pairs to go up. Okay, so when I say USD base pairs to go up, I'm talking about pairs like the US dollar, I mean USD CAD, and USD JPY, where USD is at the beginning of that pair. Okay, of that pairing. If the USD it's on the beginning of that pairing, we call it a base pair. So if it's a base pair, it's gonna go directly, I mean it's gonna go directly proportional to the dollar index. And then if it's not a base pair, just like euro USD, the USD is not a base pair on that pairing. So basically what's gonna happen, it's gonna go in opposite with the dollar index. So that's how you get to have that in your head, but that's not what we are talking about. So basically this is what I want to see: price pushing up and getting to this level, and then we get to see price push down. Okay, so we can go to a smaller time frame right now, and then we get to look if we can have maybe something, maybe we can have something. So basically what we need to do right now is to use the day trading model, but we are not trading this pair. I don't trade the dollar index. So this is just what I use for directional bias. So, but let's just look if we can have something here. So let's shift and go to the pound US dollar. So this is the pound US dollar. We are looking at the pound US dollar. This is monthly time frame. Okay, so this monthly time frame, we have here shift in market structure here being indicated. And then as we have price pushing down here, we can see that we have a lot of imbalance here that has been created. So there is a lot of liquidity void that has been created. So you can see that we have a fair value gap here. These are fair value gap here, and price just closed that fair value gap, and now is showing willingness to continue to go down. Okay, so based on order flow, if you just look at this chart here, it should be clear that our price is going down. Okay, it should be clear that our price is going down. So the institutional order flow here, it's bearish. Okay, so let me just try to squeeze it so that you can see. So you can see way back, you can see that the institutional order flow has been bearish. So this is the monthly time frame. So this is what we have here. We have this here. We have this fair value gap here. Price just closed this fair value gap here, and then it quickly pushed down. So let me see if I can not see something on 3 months, something like that. So basically this is what we have also in 3 months. This is the fair value gap. It begins here, here, and here. This is the range of the fair value gap. So price has now closed this fair value gap, and what are we expecting? Price to decline. And you can see now price is declining, price is going down. So what you're going to be looking for is, you are looking for setups here, is to look for anything that supports the idea that you have here. Even if you're not going to be trading these, but you will find setups on a smaller time frame. Hence, that's the reason why we get to talk about the bonus lessons, where I was talking about how to make entries. You find the institutional reference point from a bigger time frame, and then you find and then you go to a smaller time frame, you look for any reference point to sell short. Okay, so whatever that is happening here, it's most likely for people who will start from the smaller time frame, it's gonna be a lot of distraction. Okay, because the smaller time frame, it's a lot more noisy, so it's kind of like tricky and difficult to understand. So you need to have a clear picture from the bigger time frame. So this is what we have here. So you can incorporate this with the day trading model. Okay, so let's see if we have something clear here. So if there is anything that we're gonna be looking for a trade, it's somewhere here, because remember, this is what we have here. We have already established that our price is going down. We fill the fair value gap. So if you're gonna be looking for an entry here, since right now price is pushing up, I will be happy to find anything here, okay, that our price will just be coming for, because that one will now signal to me that price is most likely to use it to just go down. So price is just attracted to go down, because definitely we already have the bias that our price is now, it's bearish, okay, from the bigger time frame. So any move going upwards right now, it's gonna be a retracement in my view, because I already have the institutional order flow as bearish. So what I'm gonna do now is to go to a smaller time frame. So let me just go to a smaller time frame. So going to a smaller time frame, so if you just look at this, I can see there is a fair value gap here. Price came for that fair value gap here, but we can't really say we were going to trade that fair value gap, because we don't have a shift in market structure or a confirmation. But if you are using the bigger picture, okay, what we have already seen on monthly, it's not a problem to enter here on this fair value gap. But if you need a solid confirmation, you can just wait for anything here, a shift in market structure within this area here. Hence, that's why you just go to a smaller time frame. So go to 4-hour time frame. But yeah, you just go to 4-hour time frame. So if you just look on 4-hour time frame, this is what we have here. So you see that it might look small in the bigger time frame, but if you look on the smaller time frame, you can see that these are significant moves. So basically, we have price pushing down. Guess what happened? It created this small structure here. You can see this low here, and then it went up, and then it pushed down, taking out this low here. So from the smaller time frame, it becomes clear now that this is a fair value gap here, and price fill that fair value gap first a little bit, and then it comes back, it fill that fair value gap completely. So let's take, you were not able to catch that move, but I believe maybe you can find something here as we go to a smaller time frame. So you can see this is a fair value gap here, but that fair value gap, for us to select it, look at this, and you can see how price is now going down. Just look at this. You can see that when price is pushing down, it has a lot of momentum. It has this long range candle, okay, so it indicates that there is a lot of momentum going down, okay, and you already have the idea of where price is most likely to go. So I can just put the fib here. Okay, you can see this one is clear. This one, if this one is clear, just look at this one, it's clear, it's a low, and then price push up, get to this low here, and then it takes it out. Okay, it doesn't take out this one, it takes this out here, and then we have a fair value gap here. This fair value gap, it's a little bit above what, above the 50%. So price gets to above this 50% here, so you can take this trade here, and then this is the candle that is responsible for this fair value gap here. So your stop is gonna be above here, and then remember what you have on the bigger time frame. Okay, so this is a bigger time frame move, so now you're gonna get in sync with the bigger time frame using the smaller time frame. Okay, so let me shift it to 3 hours, if we can have something. So basically 3 hours and 4 hours, there is not much of a difference. Let's go to 2 hours. So you can see same thing that you see, is just some of the things they get to become clear. So basically it's just the same thing. So we have the 1 hour time frame. So basically you can see that it was clear on the 4-hour time frame, and it's basically the same thing here. You can see here, same thing here, price pushback. You can see it's the same thing here. So now, since we have already just discussed, now what you can do based on the day trading model, now this is where things get interesting. So if we just look at this here, we already have the buyers. So I can just go back and do something like this. I already have the bias. Okay, so I'm looking at this here. This is 7 a.m. New York time, so you can see here it's UTC minus, which is New York time. Okay, so now I'm integrating the top-down analysis or swing trading top-down analysis with the day trading model that most of you went through. So this is what we have here. So let me just look at that before. Let me just come back here and put something like this. So let me go on 30 minutes so that it becomes clear. So this is basically a short-term trading model. Okay, you just hold for a few hours and then you are done. But if you have this as a framework, the way we just did the analysis, you can hold it for long because you know where price is going based on the hard time frame. So you can just use this model for entry. Okay, so here is what we have here. You look at what we have here. So let me just indicate the area. So basically this is the London kill zone, 2 a.m. to 5 a.m. okay, London kill zone. You need to check the day trading guide on our website where we talked about this thing. There is a blog where we get to talk about how to trade London kill zone and New York kill zone, something like that. And also I have some templates on the website that you can get to refer to on the day trading course. So let me just make this straight. Okay, so this is gonna be the during the New York kill zone. It's the time where you're gonna be hunting for your setup. Okay, so let me just make this clear, reduce it, and then do something like that. So basically this is what you do every day. You just mark everything, you just wait and see what price does. Okay, so you can see here we have something so interesting here. So this is what I was looking at. Let me just make it big. Okay, so you can see this is the high here during the London kill zone. We have this high formed here and price pushed down, and then we get to see that we have a shift in market structure here. So this is a shift in market structure here, a clean shift in market structure here. So let me indicate that shift in market structure. So there's a shift in market structure, and then we have this buy side liquidity being collected, or this one, it's up to you. We have buy side liquidity being collected. After that we have shift in market structure, and this is a fair value gap. You see, this is a fair value gap here, and price just spiked this fair value gap and close it. But to be honest, you will not be trading this fair value gap here because there is no shift in market structure. The fair value gap that you're going to be trading, it's going to be this fair value gap here because we have a shift in market structure. So let me just indicate this. It's taking some time. So I didn't intend to make this video too long. So basically you can see here, this is what we have: shift in market structure, buy side liquidity, and then we have a shift in market structure here, and then we have this fair value gap here. Okay, and then we have this fair value gap here. Okay, so this is the fair value gap that we're gonna be targeting, and then your stop loss, it's gonna be above this candle here. This is the candle that is responsible for the formation of this fair value gap. Okay, so it's gonna be above this candle here, at least 5 pips above this wick of this candle here. So price gets to this level here. If you get to look here, you can see that this is a clean entry here. Okay, so this is a clean entry here. Price gets to this level, you make your entry, push down, targeting these relative equal lows here. Okay, so this is gonna be your first target here. This one is gonna be your first target. So this one is gonna be your first target here. These relative equal lows here, it's gonna be your first target. So enter here, you target this as your first target, and then you can target these lows here. I'm not gonna be advocating for these spikes here unless you know what is happening, or unless you have the bigger picture of what price is doing. But this is a day trading model, so it's specifically for someone who might not even be well equipped with understanding order flow in higher time frame and top down analysis. So basically that's the model. So but since we are incorporating it with the higher time frame analysis, you can hold for too long using the bigger time frame picture. So this is what we have here. So basically that's it. So we can see here we also have a fair value gap here. You can see this is a fair value gap. So today basically what I was looking at was this level here, price just coming back to this level here and closing it. So basically here it is on Euro USD. I was looking on Euro USD. So this is what I was looking at when price was around here. I was thinking that price is gonna push and get to this level here. So I was supposed to have a trade, but yeah, things happened. Price didn't get to that level. It quickly went down before it gets to this fair value gap here. So guess what? I don't have a trade. My day has been ruined. So I'm just joking. So basically that's it. That's it. There is nothing difficulty. You just need to go back and forth and do your work, do your back testing. Just keep on back testing and keep on working. That's it from me. Shalom.